guys, welcome back to the Average Joe on Money Financial Channel, and in this video we are talking about Vanguard Index Funds. Woohoo! Versus individual dividend stocks. Now the reason why I'm making this video is because I've had a number of comments on my channel saying things like, hey, why are you talking about dividend stocks? I thought you were a Vanguard Index Fund kind of guy. And truth be told, I am a Vanguard Index Fund kind of guy. Woohoo! But I also love individual dividend paying stocks. So in this video, I'm going to break down for you some of the things you need to consider before you make the decision on whether to invest in Vanguard Index Funds or Fidelity Index Funds or any other company's index funds versus individual dividend paying stocks. We're going to talk about topics such as goals and objectives, risk level, when you need the money, and then I'm going to break down for you exactly where I invest in Vanguard Index Funds and where I invest in dividend paying stocks, and so you have a complete understanding on what stance I have, and so that in future videos you can understand why I'm talking about Vanguard Index Funds versus individual dividend paying stocks. Alright, let's go ahead and jump right into the content. I don't want to waste a single moment of your time. First thing I want to talk about are your goals and objectives. You see, ultimately when it comes to investing in the stock market, people have different goals and objectives. Some people are looking to grow their investment for the long term. They don't need the money right now, and as a result, they can invest and not worry about the ups and downs or potentially any income being generated in their investments. They're looking to say, at point B, way in the distant future, I want to have X amount of dollars, and therefore I'm going to invest a certain way. Versus other people might be income oriented. They might be thinking, well, I'm not so concerned about my final number. I'm more concerned about how much income, this money that I've set aside, my retirement nest egg, how much money that can generate for me on a monthly or quarterly basis. And they're more income oriented versus growth oriented. If you're somebody that's more growth oriented, you're looking to have a much higher number at the end of this process, whether that's 20 years, 30 years, 40 years, whatever that number is, then you would definitely be more aligned with investing in Vanguard Index Funds, like the S&P 500 Index Fund, the Total Market Index Fund, even other index funds that are sector specific, such as the information technology sector, or maybe just the largest companies in the S&P 500, like the Mega Cap Growth Index Fund. These types of index funds give you instant diversification, and you can just kind of set it and forget it and then invest on a continuous basis every month, every quarter, whatever that number is for the long term, and you're just looking for that big number at the end of the process. On the other hand, if you're somebody that needs income right now, then you are definitely going to be looking more at dividend paying stocks or other types of income investments such as a bond or maybe even an exchange traded fund such as a dividend paying exchange traded fund. Kind of a topic for a separate video, but the point is you're not growth oriented, you might be income oriented. How much money can I generate every month or quarter or year from my investments? If that's your thought process, then you're thinking more along the lines of potentially individual dividend paying stocks. But that could depend on how much comfort level you have with risk. And that's the next topic I want to talk about, which is everyone falls somewhere on the risk spectrum. Some people fall closer to the riskier end, which is maybe potentially going to the casino and playing high card draw for your entire retirement nest egg, versus other people that say, I just want to put it in the bank and let it sit there on the low risk spectrum. We all fall somewhere on that spectrum, and there's no right answer. The question is, what risk level are you okay with actually getting sleep at night and not worrying about your investments on a daily basis? If you're somebody that tends to worry and have a lot of anxiety with your money, then maybe you want to stay away from individual dividend paying stocks or any type of individual stocks for that matter. You would be much more comfortable or maybe be able to avoid a lot of stress and anxiety by just investing in an index fund and knowing that you have a lot of diversification. You own hundreds or thousands of companies, and if any one company fails, that's not that big of a deal. You can just continue investing in all the other 999 companies that you're invested in. The truth of the matter is, investing in individual stocks versus index funds is more risky. Now, I work with a system when it comes to investing in individual stocks that helps mitigate risk. It's not my own system that I created. I wouldn't take credit for it, but a system created by somebody else that helps me mitigate risk and make me feel a lot more comfortable with the investments that I'm making. That being said though, investing in individual stocks is not for everybody. Okay, third thing to consider here is, when do you need the money? Because that might dictate what type of investing account you use. Are you potentially using an individual retirement account, such as an IRA, a 401k, a 403b, a Roth IRA, whatever is specific to your circumstances? Are you investing in a retirement account versus a general taxable account? Think of it as just a general investing account. They're different because there are rules and restrictions and tax benefits for investing in a retirement account. One of the important restrictions related to this conversation we're having is when can you access the money? One of the rules or restrictions that is relevant to this conversation we're having is with a retirement account, you cannot access this money until you're age 59 and a half. And if you need the money before age 59 and a half, well then maybe you need to invest in a general brokerage account versus a retirement account. But if you have no need for this money that we're investing until after age 59 and a half, well then maybe a retirement account is exactly what you need because of all those extra tax benefits. This part of the conversation is relevant for when I talk to you about exactly my investing situation and what I choose to do. So let's talk about that right now. As I've mentioned previously on lots of different videos, I invest in Vanguard Index Funds. Woohoo! And I invest in dividend-paying stocks. So the question I want to answer and be very clear about moving forward into the future is how do I invest my money? And I invest in both Vanguard Index Funds and I invest in dividend-paying stocks. I exclusively invest in Vanguard Index Funds, the S&P 500 Index Fund, the Total Market Index Fund, the Information Technology Sector Index Fund, the Mega Cap Growth Index Fund, the Small Cap, the Mid Cap Index Funds. I invest in all those index funds exclusively in my 401k account with my employer and in my Roth IRA account. Both of these are retirement accounts. They are tax advantaged accounts, meaning there are special rules and restrictions and benefits for investing in them. But the biggest restriction is the money that I put into these accounts is not available to me until age 59 and a half, with the exception of the money I contribute to my Roth IRA. So I've got exclusively Vanguard Index Funds in my retirement accounts. Nothing else. No individual paying dividend stocks, no Fidelity Index Funds, no other types of investment accounts, no actively managed mutual funds, none of that stuff. Just Vanguard Index Funds. And for me, I'm 33 right now. I don't need this money until past age 59 and a half. I'm not counting on that in the next 10, 15 years as income that I can use. It's just to sit there and grow over time. And I'm investing 6% of my salary into the 401k account as a Roth contribution, and I'm getting a 6% match. That money's going in, it's being invested. I don't even think about it. I rarely even check the balance because I don't need the money anytime soon. And I know that over time the markets will go up and down and up and down, and I'm not too concerned about the ups and the downs as long as that ending number is much, much higher than the amount of money I contributed to the account. So when do I invest in individual dividend-paying stocks? Well, if you've watched any of my previous videos, you know that I have a Robinhood dividend investing portfolio where I own individual dividend-paying stocks. And as of the making of this video, I own 31 different stocks in this dividend stock portfolio. The investing account I have with Robinhood is known as a general taxable or general brokerage account, which means that all of the income that comes from this account, whether it's dividends or interest paid out or potentially a capital gain that is achieved through selling a stock for a profit, all of that income or capital gain is taxed every single year. There's no tax shelter or tax advantages for this specific account. And the reason why I invest in this general brokerage account with these dividend-paying stocks is that I need this money before age 59 and a half, which would mean that I would have restrictions on this money if I had it in a retirement account. So the reason why I do that is I have a specific need as well as a purpose for this money. I intend to live off the dividends that are produced by these dividend-paying stocks. I don't have any plans to sell these stocks in this portfolio, though there could be circumstances that arise that would prompt me to sell a stock if I thought the dividend was in jeopardy. So hopefully this video puts an end to the controversy about whether I invest in both Vanguard Index Funds and or dividend-paying stocks. The answer is I invest in both in two different accounts for two very clear and different reasons. Again, retirement accounts are just for that, retirement. That money is going exclusively into Vanguard Index Funds. Woohoo! And then outside of my retirement accounts, I have a Robinhood dividend investing portfolio, a general brokerage account that is taxable and where I invest exclusively in dividend-paying stocks that are going to allow me in the future, 4 to 5 years from now, to live exclusively or at least in part on these dividends that are produced by these companies. So now is your opportunity to leave your 2 cents in the comments below. Do you agree or disagree with my strategy for dividend-paying stocks outside of my retirement and index funds inside outside of my retirement? Do you have a similar strategy? Make sure to give your feedback and leave your 2 cents in the comments below. So, if you haven't done it yet, and how have you not done it yet? Make sure to hit that subscribe button below and click on the notification bell to be alerted to all of my weekly videos. Every single week I put out at least 2 to 3 personal finance videos designed to help the average Joe out there. People like you and me with all things personal finance. Whether it's budgeting, paying off your consumer debt, investing for your future, and everything in between. If that resonates with you, consider hitting that subscribe button and joining the Average Joe on Money financial community. So, the great news for you is even though this video, it's about to end, the learning doesn't have to stop. You can click on these videos right over there.